Hello, I'm joined by Thomas de Vargas Machuca, who is the head of the executive committee of Adler Real Estate. Thomas, thanks for joining us.
Thank you very much.
Can you start by giving us an overview of what Adler does?
Yeah, absolutely. I mean, Adler, together with another few companies in Germany, we're effectively a listed residential real estate company, and that means that we buy and we own long-term holders of affordable housing in Germany, and then we asset and property manage them throughout our ownership period. We collect the rent, we pay all the expenses, and we return a good return to our stakeholders and shareholders.
And can you give us an idea of the portfolio of holdings that you have?
Yes, we're now in the middle of a takeover of one of our listed competitors, but at the end of that process, we'll have around about 52,000 units across predominantly 4 different regions in Germany, which are North Rhine-Westphalia, Saxony and Lower Saxony, and Berlin. And these are really the areas that have been generating the highest contribution to GDP in the Federal Republic of Germany, excluding Berlin, which you kind of analyze slightly differently. And effectively what we offer is affordable housing to the employees, to the workforce that work in the manufacturing segments throughout Germany.
I see. And what's the investment case? Generally?
Well, the investment case is there's somewhat of a mispriced market in Germany in terms of, the average valuation today are around about 40% below the replacement cost. So there's very little development in the affordable housing segment because obviously it's much cheaper to buy the existing stock, and therefore what you find is that the yields are particularly interesting from an investor's perspective. Also considering, if you want, the positioning on the risk-reward curve of where Germany sits and where real estate in general sits, and within the real estate asset class where residential properties lie within that. So you have a very unrisky investment case with a very, very generous return coming from the mispricing element of it.
And what effect will the quantitative easing that's been announced and is actually happening from the ECB, what effect will that have on the business?
Well, I think it's had an effect already. I mean, when Draghi came up with, whatever it takes, we now see the benefits of that. Now, in particularly, property companies, are typical to be using leverage, more or less to a certain degree, but it's a levered type business. And clearly, with quantitative easing, you have 2 effects. One, very cheap financing, which clearly offers great returns to the investors, both on the equity side and indeed on the debt side when you look at how much coupon can be offered to the debt investors. The second thing is it offers a very much more stable horizon, if you want, of low interest rates, which obviously has positive drives in regards to refinance risk and other typical risks that should be associated with property investment in general.
And given that, on a slightly different tack, you not only own the properties but also manage them, is there a sort of a perfect size for Adler, or is there no limit to how big you could get?
Well, I mean, we've grown very quickly over the last 2-3 years, simply to take advantage of a fast-growing and quickly appreciating property market in Germany in our space. Clearly, also to tag on to what you just asked before, the quantitative easing measures will also be a great driver towards 2 things. Obviously, it has created a weaker euro, together with other obviously variables. A weaker Europe, or euro, I should say, will benefit Germany in particular as being the largest exporter in the world and a big manufacturer. So effectively, all these drives make Germany by far more interesting as a geographical area than other areas in Europe.
And so does that mean that as the German economy grows and the people who would live in the houses that Adler owns, would you want to become owners of 100,000 units? Right.
So the size question that you asked, I mean, we grew very quickly, and over the last 2 years, I said that we'd like to be at around about 50,000 units. In order to start getting the benefits of economies of scale, both at the property level and within the capital market. So at the property level, it means obviously bigger negotiating power in the cost of materials, in having a wider footprint in terms of negotiating with property managers who manage our properties in the local areas, and all these obviously other drivers. Even when you're going out there to acquire portfolios, you're more of a household name, therefore you get a bit more product to be seen. From a capital markets perspective, of course, that size equates with larger cash flows. It means you're more diversified, you're less risky, you can structure instruments or offers that are of interest to a wider investment community, and all that is all very much in line with making those efficiencies in line. So you get more liquidity, therefore you have bigger investors come in that take larger positions. You start getting research because you're more interesting to the investor community, and it becomes a bit of a what do you call it, a self-fulfilling prophecy, if you want. In terms of, so it's not size per se, it's obviously the value creation. There's a lot of value that the capital market recognizes once you become very transparent, very accountable. So from that respect, size does matter. But once you get over the 50,000 unit, between 50,000 and 100,000 units, is not as different as going from 10,000 to 50,000.
I see. And I mean, given that you're still in the process of finalising the takeover, what other news, apart from the finishing of that, should an investor look out for in the next year?
Well, I mean, I think that we offer a great value proposition because obviously, we're very much in our growth phase, and our growth phase at the beginning was ramping up a sizable portfolio to exactly be able to benefit from the economies of scale on the two pillars of our business. And I think that over the next 2 years, once we've completed the Westgrund acquisition, we'll put a lot of effort in generating that value creation, which effectively means rental increases, reduction of the vacancies, so that we can mark to market our portfolio, and within that you find that a lot of value is extrapolated because of the metrics that effectively represents.
And is there anything in the wider European economy that you think investors should keep an eye on with respect to your business?
Look, I think we touched upon it a second ago. I think Germany will be the net beneficiary from, and certainly the real estate segment, in Europe, simply because a weaker euro means making German products even more attractive than what they are. And Germany has simply the fantastic ability to produce very high quality product that other countries, other industrial areas struggle to get to that level of quality. So certainly will be a driver. That typically means higher demand. That means more workforce. More workforce means more demand for our housing. That means obviously our stock is becomes particularly fashionable when you're correlated, if you want, to the industrial output. On top of that, what we find is the misalignment of some of the European economies, whereby you find that net migration really in Europe has two countries in which it's particularly felt. In the UK, of course, as we know, but in Germany as well, of skilled workers that come from Southern Europe seeking employment in the industries that they work for in their countries that no longer operate at the level of efficiency. So they're all moving to Germany. These are all obviously legal migrants, legal skilled workers, I should say, and therefore you have this double push effect towards, and with a lack of construction and with a lack of housing there too, all indicators point towards an appreciation of the market until you get to a level of, to a value in the current properties that is pretty much in line with what creating a new product would be, and then therefore you'll be agnostic as to whether you buy existing stock or new, or you produce it new. But up until that level, there is that drive.
Sounds like good times ahead for Adler. Thanks very much for coming in.
Thank you very much.
If you'd like any more information, please visit the Edison website.